One of the things that surprised me the most, or still surprises me today, is the number of clients and prospects, people that come to me to talk about retirement planning, who have a very, very difficult time actually spending their money. And we've done shows on this, on how people are saving too much, or they're not retiring fast enough because, and I say fast enough, soon enough, and they have too much money in the bank. Crazy thoughts, but you'd be surprised. And I've been thinking about this, and it really comes down to a fear. And I want to talk about that fear and how it can destroy people's retirements. And I'm going to use some practical examples of clients and the interactions I've had with them over the years, and then also give you some tips and strategies on how to combat this fear. One of my personal fears is doing a show without my trusty sidekick, Tony. So let's end
Sure.
that by bringing him in.
Sure.
Tony, welcome to the show. Have you ever heard of, wait for it, chromatophobia? Chromatophobia, also known as
Chromatophobia. I've heard
the
of
fear of spending
chromatosis.
money.
I've heard of chromatosis, but never
Chromosomes?
chromatosis,
Oh.
but I've never heard of chromophobia or
So you can
No.
Google it. Chromatophobia.
chromatophobia.
I think it's a made-up word, but if you
Sounds
Google
like
it, you'll see so many people talking about it, how it's the fear of money. I was not able to find any scientific journals on it.
The
So
fear
I
of
think it's a made-up word.
spending money. The fear of
Yeah.
spending money. Not the fear
Well,
of money, but of spending it.
and it's also the fear of money as well, and touching it and the feeling. But
Oh,
yeah, but I don't see any real medical journals, so it could be just a made-up word that people are just in the financial services industry are using. But that's not to
sure.
say that it isn't a real issue. And so I'm going to start off by saying neither Tony or I are psychologists or behavioral therapists, and I don't want to
Well,
discount anyone that legitimately has a fear of money where they sweat and get nervous about touching. That's a different issue. We're not going to talk about it. I want to talk about specifically how fear and anxiety surrounding money issues can lead to poor decisions or just no decisions in retirement.
Okay.
So I want to give some examples of people, real people that I've interacted with, and how they are really hurting themselves. And maybe we could figure out what is the bottom, get to the bottom of it,
Sure.
and what to do about it.
Well, I think it's a good topic because obviously a lot of retirees have a lot of different types of fear and anxiety regarding their money. I mean,
Yes.
you've seen it all. I mean, you've worked with so many people and had so many people come into you where you do their financial and retirement income planning. And, we've talked about the big one, and every financial advisor out there, the biggest fear people have, even greater than death, is running out of money in retirement, right?
Yeah. Yeah. I've said that's irrational, but the more I think about it, it makes sense. People don't want to go in a nursing home. That's another big fear. Some of
Right.
the symptoms that I've seen and that you might have, you're watching this, you might say, oh, I feel that way. Extreme frugality. Now, we might call them cheapskates growing up or tightwads. There's a difference between not wanting to spend out of fear versus just being cheap or greedy,
Right.
right?
Right. Especially in
Um,
retirement, it's it's a fear that they don't want to spend anything because they're worried, right?
right, right. So there's a fine line there. Avoidance of money discussions.
It's a
So
big
you'll run
one.
into people that don't want to talk about it.
Yeah.
Irrational spending decisions, or just refusing to spend on things that they should spend money on it. And a lot of clients have just anxiety around actually retiring in itself.
Yeah.
I'll give you some examples of these. Um, Avoidance of money discussions. I've seen this quite a lot. Well, I'll go to meet someone for the first time. And let's say we're at their house, or I tell them, bring in some statements, right? We're just getting to know each other. I want to find out where they're at. And they will say, "Oh yeah, I have an IRA account at Fidelity." And I'll say, "Well, what it's in it?" "Well, I don't follow it very closely." I'm like, "Okay, where's your last statement?" "Oh, they're right here." And they'll go and literally hand me the envelopes for the last 12 statements unopened. Unopened envelopes
Right.
of monthly statements.
Yep.
And the first time that I saw that, I was taken aback. Who does that? That seems insane to me. I open junk mail. Not so much anymore, but like, if something's sent to me, I'm opening. I want to see what's going on. People get excited about packages, but financial statements are one of those things that I see people just completely leave unopened, literally.
Oh, you've hit a little nerve here, because I'm guilty of that, or I was really bad about that. Not so much anymore. I want to see what's going on now, but I used to be that way. I used to have all my 401k things. I would never open those. I would never look at
Now,
it. I would never go
would you
in.
look
Now,
online? Would you
nope.
look online, say, I don't need to open the
I
paper?
I would nope. I didn't want to. I just thought, leave it. I used to be that way. I don't do that anymore. If I see something from a financial institution, I open it immediately now. But I remember having that stack when I first went in and saying to talk to somebody about it. I gave them unopened envelopes. That's funny. That's exactly the story. Could have been me you're talking about.
So let's go a little further, Tony. Let's have a little session here. A little sit on my couch, lie down.
Sure.
Um, a- and I'm not belittling it because I know that it's legit. A lot of people have this, and you just proven it. And I didn't know this. Why wouldn't you? What was the reasoning, or do you know?
Well, I blame my parents.
No,
Honestly,
no, no.
because
Keep going. I know. I'm serious. That's probably it.
yeah. No, I blame my parent. Like my grandfather and my dad and my mom, they never discussed money. Never talked about it in any way, shape, or form. Wouldn't talk about it. And it's not just like I expected them to tell me, here's what my bank balance is and here's how many assets I have. I'm not talking about that. I'm just talking about in general. They would never discuss it, and didn't even give me tips, or I wasn't taught to value money. Like if my dad got a bonus, he'd go out and buy me a new snowmobile or something, much to my mom's dismay. And I think he had issues with money. He'd buy a new tractor or whatever. Um, so I was never taught the value of money. So when I was younger, I just didn't care. I'm like, okay, I guess I have a 401k, whatever. Uh,
Okay.
money comes out of my check. I don't need to worry about it. But deep down, I think it was just like, I don't want to deal with that.
Mhm.
I don't want to deal with money, or,
Yeah.
I just want to be
And
able
and
to live life and do what I want and not worry about the money. But you can't live like that, especially as you get older and close and have kids or get close to retirement. Then I woke up, with children. You're like, oh, wait, I'm responsible for other people now. I better pay attention.
is your wife the same way?
Nope, she is not.
So maybe she brought you out of the shell,
Oh,
And what
she
happens
helped.
is
Yeah.
if she didn't, or if you never got, you could go through whole life that way. And I have seen it. Someone's 60 years old and they
Wow.
never open their statements. A
Wow.
lot of times it's because the spouse did it, and then now the spouse has passed, and
Yeah.
it's like, I don't know.
Well, my wife and her
So
mom worked at a bank, so, and in
yeah,
banking growing up, so they were
you didn't
very.
have chromatophobia. She didn't
No.
just
Well,
go to
well,
work in cold sweats every day.
yeah. Well, my wife doesn't. But I mean, my mother-in-law is a different story. We don't have to get. I think actually you're
Might watch the
probably going to
show.
tell stories. This fear of spending money. I
Yeah.
definitely
So
have family members of that age group. I think it's maybe a generational thing, but I know people like that.
well, I also know a lot of financial advisors that say, don't even look at your 401k. Just let it ride. Don't, because what they're trying to do is combat people from making irrational decisions
Oh my
based on
gosh, it went
emotions.
down. Yeah. Oh my
Right.
gosh, the market went
So,
down 20%. I got to move everything to cash and put it
right.
into a
S-
savings account.
Right. And to avoid to not look at the statements, then you don't see it going down, then you won't panic, right? So I think a lot of people don't open it because they don't want to see the drama.
Right.
They're just right because
And there is
they're
an
being
argument for that because
there is
most people make costly mistakes, especially with money that they have in the market or these retirement accounts, by making emotional or irrational decisions. That can cost you a lot.
right. It can, but I don't like the idea of just avoidance. I'd rather address
No.
it.
Yeah.
So I think knowledge is the answer instead of avoidance. So let's talk about irrational spending decisions or refusal to spend. I'm thinking of a couple now. It's probably been over 10 years. They moved to Florida and they had over 2 million in investments. Plus, they owned a home, and so they didn't have any debts. And we were planning. They were trying to figure out when to turn on Social Security. And that was the impetus to talk to me. And when I started talking about investments and income, and it came to a point where they decided to hire me. And one of the things that struck me was that they had 200,000 in the checking account, in their checking account, joint checking, making zero. Now, 10 years ago, zero was pretty good because the interest rates were, if you could get
Right.
2%, you were happy. But even still, um, when I started talking about, well, maybe we should get a CD, maybe, it was, if I get a CD, then what if I need it? And I was saying, And one of the most popular shows that we've done is how to how much money you should have in cash, right? A hugely popular show. And there's always people debating on what makes them comfortable.
Right.
But what I found was that it wasn't the husband and wife, it was just the wife who felt comfortable having 200,000 in checking.
That's
And when we
crazy.
started thinking about income, it wasn't until like hey, you can make an extra 2%. That's 4 grand a year. That wasn't enough. That wasn't enough to budge,
Wow.
right?
Okay.
Um, and then we started talking about healthcare subsidies and how keeping your income low would allow you to get a higher uh, income. I mean, a higher subsidy from the government to pay for health insurance. And so we started doing the math. And if she took from, she would rather take from her uh, IRA money and the interest that it was making than touch the cash. When I was saying, well, if we just let that compound and ride for a little bit, we can show artificially that you have less income. When you actually don't, you could take it from your savings. Your account's still going up, but we could take the equivalent amount from your checking account. The government doesn't care about that. Now you're getting $18,000 a year in subsidies. And that was the time she finally kind of switched, right? And it was like, oh, well, that's a lot of money. So now I'm looking at a $20,000 extra, which represents 10% return on that 200K cash.
Yeah.
But she still didn't budge on it. So that first year, we did that, but instead of taking 20,000 out of her checking to pay for the bills, she took the money from her investments and other investments and threw it into the checking and then took the 20,000 out. She's always trying to keep it above 200,000. Fast forward 3 years and I'm still trying to get her to do it. Finally the switch was made and now that's not a problem. She's spending. But there was a good 5 year period of battling this irrational, and I called it irrational, desire for her to have in checking that much money.
Well,
And
it depends on their lifestyle and what they need to live on each year because you do say, I mean, they do say 3 to 6 months worth of salary or worth of income in an emergency fund that's liquid. I think she was concerned
this was
about
above and beyond that. This was above and beyond the emergency fund, right?
That's
She
crazy.
had cash. There was plenty of money to go around. They were making more in interest than they were spending, right? They still are. So
That's
it was,
crazy then to
it was
leave.
just this,
She
yeah,
had to have that balance be above
right?
200,000. That's
It was
crazy.
just something that she's always had. And I would consider that some sort of irrational fear of, and it was always, well, what if I need it? Well, when would you need it? when's the last time you wrote a check for 200,000 to fix something or to
Yeah.
get,
Or even
so
100,000.
right, right. So uh, here's another example, Tony. This is a more recent one. I mean, but that happens all the time. I get people with their magic number that they can't come off of. And I don't fight it. I just acknowledge it and say, and I'll get a little bit how we can combat it. But this one was very recent. A client, she's single. So that adds a little bit of anxiety when you're by yourself.
Oh yeah,
But
for sure.
she's always been by herself. So, but she is dealing with a lot of family issues, financial and everything. But she's got plenty of money. And I say plenty, meaning this situation shouldn't happen. Her back hurts. She's in physical pain from her back, and she's identified it as probably stemming from her shoes. And she's identified the need to get new shoes that would probably help her back. But the new shoes she wants are $130.
Mhm.
And that 130 represents a penny on average to her total net worth. But she can't, and she's vocalized this to me, and she said, I want to do it, but I just got some new shoes, sneakers, and they're really new and they're nice, but they're not doing the trick. Those other ones will probably do better, but I just can't do it. I just bought new ones. I'm not spending $130 on a pair of shoes. Now, this I can relate to this because I remember as a kid when I was in high school and all the new basketball sneakers came out and I played basketball and my mom was like, "No way in hell are you getting new sneakers." Like, no. But the team's getting the no. No. And the new sneakers were like 60, $70. Like that was
Yeah.
ridiculous.
Yeah.
No, you'll get the $12 pair, which are perfectly fine. And so I still like when I go to dinner, I still look at the prices on the menu. It's
Oh,
just
sure.
something ingrained. You
Yeah.
mentioned your parents. Like I think it's ingrained. And this client, uh, she grew up this way. Spending 130 on a pair of shoes is not in her blood. But I say this refusal to spend on something to improve your health is irrational. Yet look how powerful it is. She even knows it and she still can't do it.
Wow.
So I run into this all the time and I don't know what causes it. I'm not a psychologist, right? I do think it stems from the way you were raised.
Right.
And it's not going
Which
to be
the
something you
Great
could just flip a
Depression.
switch.
I hear the excuse for this behavior, and I see it with my some family members, older family members, much older, and that's they grew up. Their family, their parents, they grew up on a farm with not a lot, and their parents went through the Great Depression, and they were a Great Depression baby, right? So the Great Depression is that's what I hear thrown out. When I hear this discussion, it's like it's because of the Great Depression. But at some
But it's 100
point,
years ago now. It's
yes,
100
it's
years. It's
100.
generational
eh,
generational behavior
yeah,
is the
100
excuse.
years ago. So, and there might be some truth to it, because I have seen it with a couple of people. But it's like they just grew up. You don't spend money, you just don't. And
Right.
so,
You don't. You don't. I was the youngest of four boys. My dad was a high school public school teacher, and my
oh
mom
boy,
didn't work. And so we didn't have a lot of money and everything was hand-me-downs. But we didn't want for anything, right? But we didn't ever, I mean, we'd going out to dinner, forget it. That was like maybe
yeah,
someone's birthday, but no way. And so things have changed, but I just see it as it's just the way you are, right? But sometimes it can become completely irrational, and maybe that's where you need to bring in a behavioral therapist or something like that, and that's legit. But here are some tips to get over this that I've used over the years with clients that seem to work. I don't have any scientific proof for this, but one of the things I've done, and let's take the example of the person that didn't want to buy the shoes. Change the mindset. And so what I'll say is instead of saying I'm going to spend money on a new pair of shoes, it's I'm going to invest in a new pair of shoes. Because now it's like, oh, I'm not spending money, I'm investing money. And people that don't want to spend do invest a lot of times. I want to get that extra money. So you're investing in your health. When I grew up, I would ask my mom what's for dinner, or probably too much. As soon as I get home, what's for dinner? This is just what we did. My kids
Yep.
do it now. And she would always say whatever was on sale at the store. That's what we'd eat. Pot roast again. Well, it was on sale, right? And so and I remember, it's funny you mentioned your grandparents. I remember my grandfather, he said probably 100 words to me over my life. And
Oh,
he
wow.
died when I was 20. So it's not like, and it wasn't like I didn't interact with him. He just didn't talk, right? But I remember vividly him saying one day, and I had to be young. He said at the dinner table, we take as much as we want, but we always finish what we take. And so I had this irrational fear that I got to finish my plate, and that's still something I do. You can't leave
Yeah.
leftovers, right?
Right.
Um,
That's how I was raised as well.
So, but when I'm looking at a store and saying, well, this product is more expensive, but it's healthier, the whole fast food thing is quick and easy. But if you spend more, you can get a healthy meal. It's an investment in yourself instead of
Right.
just spending, right?
Well,
So,
and you'll save
change
more.
that
That
mind
$130 to help her back is going to save her in healthcare costs more than $130, probably in the long run.
in the long run.
Yeah.
Exactly. So you have to look at it as an investment as opposed to instant spending. The other thing that I use is a lot of just obtaining more knowledge. It's eliminating the unknowns. The more you know about something, the less there is unknown. I think fear is driven by not knowing. So why don't I take 200? Why do I leave 200,000 in my checking? Because I don't know. I might need it. Well, let's go through all the examples of why you would need it, and let's map it out and come up with a plan for exactly how we would fill that income need in that case. And by going through that process, well, you can't always, there's never going to be everything known. That's life. You'll never eliminate the unknowns, but you can plan for a bunch. We did a show recently on how to prepare for the unexpected expense in retirement. You're not going to know that you need a new car because someone hits you, an uninsured motorist hits you and destroys it, versus a new roof because a hurricane comes or what. But you will know that at some point you're probably going to have a big spend. If you start running through the numbers and saying, okay, if something like this happens, where would I go? And then have a plan for it, it allows you to kind of loosen up the rest, right? That's what I would do for the case when that's what I've been doing for the case with the woman that wanted that 200,000. I said, let's every time I said, what happened here? What was the surprise this year? Well, we had to redo the landscaping because the flood came. Okay, how much did that cost? Well, it cost us $30,000. Okay, where'd you go? Well, you told us we have it over here in our investments, so we use that. Why didn't you use the 200 in the bank? Nah, I get it, and so, but you keep showing that, right? I think knowing more is better. Opening those statements and talking about it better hurts in the short run,
Yeah.
right?
Because
Long run better.
financially, that doesn't make any sense to pull money out of an investment account and pay taxes on it and lose all that potential, compounding interest when you've got money that's earning no interest just sitting in your checking account that you could have used. That's crazy.
Well, people put money under the pillow still, under
Yeah.
the mattress. They feel safe. And I'm not
Yeah.
going to discount the feeling that you get by having safety, but
But
there's
they're
alternative
losing
ways
money.
to have safety
But they're losing
and still
money.
get something. Right. They are losing money to inflation,
Yeah.
opportunity cost. And so knowing what those alternatives are is helpful. Oh, you mean I can put it in a CD? What are the penalties to leave? Oh, I don't pay a penalty, or oh, the penalty is only the interest and only 3 months. All of a sudden, it's like, oh, I didn't know. I always just thought if you get taken out early, you lose the whole thing, or what. And so knowledge is power there.
Yeah. It
And then
it really
and then
is.
the only other one that I've had a lot of success with is particularly for people that don't want to spend in retirement because they're afraid of running out, or they just they're really tight and wound. It's like, I didn't spend a lot, I've saved, and now I'm retired. I'm not going to start spending just because that's what I do. You're not, but they never can get over that hump of, I don't have a job, so why would I ever spend my money? It's going out the door and not coming back in. I start small and I automate. So, as an example, Tony, you have 3 million in the bank, but you can't spend it all because you're afraid you're going to run out. But all the math shows you only need 20,000 a year from it. You're making more than that in interest. So what I'll do is say, all right, let's start, Tony, with a $500 check coming to you every month from that account. Well, okay, well, it's still good. The account's still going to go up, but you're getting 500 a month from it. And then that money comes to you, and now you feel like you could spend it because it's there, right? But if it's always up in some nebulous investment, you don't want to
Right.
touch it. Once
Right.
you start drawing from it, putting it in, it starts to feel
Start
easier to
small and
spend it.
automate it. And you got to live
Then
your
you
life
bump
in
it up.
retirement. You work so hard. I just, it is frustrating to see people who work so hard all their lives, and they've done, the ones that do good in saving and have plenty of money saved for retirement, and then they're afraid to touch it, and they just
Yep.
live like paupers. And I respect the you don't want to be on the other side where you just spend money. I've seen that with family members where you just, and that's the side I would lean toward. I like to, buy records and spend money and go to
Look
concerts.
around, Tony. Look
Yeah.
around. That's years in the making.
Exactly. But I do see the other side of it. I mean, I have some relatives that I see that they have a lot of money, and they won't spend any of it. They won't go out to eat. They won't take their grandkids on a trip. They won't do these things, right? But
And
I get it. If you're saying, and I always say you can't take it with you. Now
yeah,
you might say, I want to leave it to family. Sometimes that can be a burden to the family. Can your grandkids handle it? Are you really doing them a favor, or do you have specific uses for it? Like, I have an extra 50 grand, but I want to pay off my grandkids' college loan. I admire that, you know.
yeah. And so that's totally fine. And that's uh, that spending it while you're alive and seeing and feeling the value of helping out your family or the church is better than leaving it at the end.
Yes,
But
yes. So
that's
many
the
people think,
psychological
well, if I
barrier.
save and save, it'll go to my loved ones, and that's good. No, how about you help them now while you're alive, while they can
And
thank
you can
you and
dictate some
appreciate
of
it.
it. Right.
And you
Right.
can you
They
can dictate who it goes to, when and where, and how it's used. I mean,
you could
uh,
see the fruits of your labors.
yeah,
Yeah.
I have a relative, and you and I have talked about this person where they have all this money sitting there, and they have grandkids just buried in student loans and things, and they're like, I'm gonna run out. They're 91 and they have tons of money. It's just like, no,
Sometimes
you're not
you
gonna
can't
run
change
out.
it.
You're
You
not gonna
can't
run out.
change that, you
Well, what
know?
if I need memory care? That's $12,000 a month. It's like, at that point, I would say, do you want the facility to have the money, or do you want your grandkids to have the money?
Right. And theoretically you won't know. Right. Um
Right, you won't
so
know, so that's the same as waiting, and you can't, it's just some of these people are like, you can't take this with you, right?
the
I mean,
Egyptians tried that, Tony, right? They found it all.
once you reach a certain age, and there's our buddy Enzo walking by in the background for the viewers, the people watching on YouTube just saw Enzo. But anyway, yeah, I mean, fear is real, and especially for seniors. I mean, hello, I'm cold, and there are wolves after me.
It's true.
The
It's fear.
Simpsons, the
Their
Simpsons,
fear.
and
That's a good one.
that's a it's meant to be funny, but it's just to show, how, we're afraid of things, and fear and anxiety. It's not uncommon in retirement, like you say.
No, it's not. It's not. And I see it all the time, and I struggle with it myself in certain areas, but I help my clients do it.
Sure.
It's everyone's got some level of it. If they don't, they probably have the opposite problem, like you was describing. It's a lifetime thing, and it doesn't. You can't flip a switch and say, "Oh, I'm going to be a spender now." Oh, don't worry about me. I'll spend it. No, the savers save, the spenders spend.
Yeah.
Right. Your best
Yeah.
bet is to hope you married someone that balances you out.
Yeah.
So I think the answer, though, Tony, is engaging and understanding the planning process, getting that information. So, okay, I want to keep 30,000 at all times under my pillow, literally. Okay, well, That's fine, but let me just run through some scenarios. What if there's a fire? What if there's a flood? What if your car breaks down? You need to pay. You're going to take cash out from under your pillow and pay for it? No, I'll just use a credit card and pay it off with it. Okay, so then why do we really need that cash there? I'm not saying it's bad to have cash literally in the house, but you know what I'm saying? So you teach the process, and the fear kind of dissipates, hopefully fast, but sometimes slowly, once you get more and more involved in running scenarios. That's the takeaway. But just acknowledging it is the first step. Understanding you're not alone. It happens to a lot of people, very common. Talk to someone about it, whether it's a therapist, psychologist, or your financial advisor. You never know. They might actually have some experience with it. That's it, Tony. Hopefully, I didn't
Good
uncover
show.
any deep-seated fears from you. You're gonna go weeping back.
I'll cry myself to sleep on my huge pillow, Dan.
It's too high because you stuffed all those $100 bills under it.
That's true.
Well, thanks for a good show, Tony. We'll catch everyone next week.
All matters discussed in today's show are for informational purposes only.
This show is not investment advice.
Dan Riddle nor Dolphin Financial Group are affiliated or endorsed by any government agency.
Investment advisory services are offered through Dolphin Wealth Management, Inc., a registered investment advisor in the state of Florida.
Insurance products and services are offered through Dolphin Insurance, Inc.
Dolphin Wealth Management, Inc. and Dolphin Insurance, Inc. are affiliated companies doing businesses as Dolphin Financial Group.
You should talk to someone at Dolphin Financial Group before implementing any of these strategies or ideas.